So in this video, guys, we're going to talk about the difference between scalp trading and swing trading, especially talking about the one thing that I wish I was told 4 to 5 years ago when I started day trading and investing, right? And another thing that I don't see many other experienced traders talking about or educating people on is the difference between scalp trade and swing trade. And I don't mean the fundamentals or looking at the chart. I actually mean the key difference in success rate, win rate, and why winning scalp trades, becoming a very good scalp trader versus becoming a good swing trader, or 2 years from now you are both, you're good at swing trading and scalping, why you're going to win your scalp trades more than you're winning your swings, right? The number one reason is to do with a negative downside to actually doing swing trades, right, versus scalp trading. The upside to scalp trading and the downside to swing trading is the fact that the longer you hold your trade open, right, the longer you are in the market, the more susceptible you are to changes in the market. This is the number one key factor as to why a really good swing trader, like let's say their win percentage is 55 or 60%, which is actually really good for a swing trader, right? 55, 60 to 65%, you're a top tier swing trader. You're winning more than half of your trades, especially if you have a large risk to reward ratio, like 1.5 to 1 or 2 to 1. So you're earning more than you're losing. So if you're to open 2 trades, right, with a 2 to 1 risk to reward ratio, so you go for $100 for the win, but $50 if you hit your stop loss, right? That's 2 to 1, 2 times the reward versus 1 times the risk. So $50 loss or $100 win. So if you do 2 trades, right, you make $100 on the one, but then you lose 50 on the other. You're still up $50 because you made 100 and only lost 50. You did 2 trades, you only won 50% of the time, but you're still in profit, you're still making money. So that is the definition of a good swing trader. Anybody that wins more than half their trades, even 55%, you will be able to make money. You will be able to make money every week, every month, and over time, you'll be able to compound your trade account massively. And day trading and investing is one of the most, if not the most powerful way to build wealth in the world, even if you're just starting with a couple $100. Right? There is no better way than making money via compounding, right? You can start a business and you can make money with that. And I always recommend if you're just starting out and you're looking to do something that's a little bit more reliable. Now, day trading and investing is very reliable when you become good at it, which can take a lot of time, right? Building a business like an Amazon business, for example, there's maybe more things that you actually have to learn to do well on Amazon, but it's a lot more simple. It's a lot less strategic, especially if you're doing piggyback dropship or you're listing items that are already selling on Amazon, for example. You don't need a massive skill set. You just need pure grit and the right training and resources to be able to do it properly. Right, so getting back to swing trade versus scalping. So like I said, the longer you hold your swing trade open, the more susceptible you are to changes in the market. Examples of changes in the market that can affect your trade. So let's say you open up a trade for Euro USD, so the Euro versus the US dollar. And this trade, let's say you had a target, you bought this trade, right? So you enter a buy instead of a sell, because with Forex, on a broker with leverage, be it a stock, crypto, or Forex, or indice, commodity, energy, whatever it is you're trading, when you're using a broker with leverage that you can use on the MetaTrader 4 or MetaTrader 5 app, right, you can buy or sell, kind of like an option, because with a standard stockbroker, all you really can do is buy. And once you buy, you are now in the position. But when you're using a Forex broker, you have money in your trade account, you can enter into any position at any time you want, be it up or down, buy or sell. So that's a really cool thing about day trading using brokers like that and using the MetaTrader 4 app, is because you can buy and sell anytime you want. You can set your stop losses and take profits. But a few examples of market manipulation. A lot of people talk about, oh, the billionaires are always manipulating the markets and screwing over retail traders. And there isn't 100% evidence that actually does happen. Now, I do know and I do believe that market makers, people with billions and billions of dollars, they can move the market, right? It is possible to move a market, especially, let's say, a stock that has a certain market cap, let's say a $50 million market cap, and someone buys $50 million worth of shares, that's going to create some movement. That's going to create some volatility. But in the Forex market, it's a little bit different because it's a $5 trillion plus industry, right? Marketplace. It could be moved by multi-billionaires. There's a few other factors that can move it, but it's more so news and buyers versus sellers, right? It's for the most part buyers versus sellers. The buyers being the billionaires, and today, let's say a lot of people are trying to sell Euro USD, and the billionaires are all buying. Yeah, the buyers are going to have more power because they have power in numbers. They're putting a lot more money into the markets. They're going to make it move up, right? Now, Another thing that you could be susceptible to when doing a swing trade and holding it open long, like let's say 1 full week, right? So you enter that trade on Euro USD, you hold it open for a full week. Your aim is to hit your take profit in 1 to 2 days max, but 1 to 2 days later, you're still not hitting your take profit. Let's say you're just below your entry, so you're still in the red, right? You're still in a little bit of a loss. So you're waiting for your trade to turn into the green or blue with the MetaTrader app. The wins are blue. So you're waiting for it to go into the win zone, into your take profit territory, right? So you enter here, and up here is your take profit, down here is your stop loss. So you're just teetering around here, and you're waiting for it to go up to your take profit. Or if you sold, you're waiting for it to go down to your take profit, and it's not there yet, and you want to keep holding your trade open. The longer you're holding it open, the more susceptible you are to changes. So if Euro USD, let's say you sold Euro USD, so you think Euro versus the USD, right? The Euro versus USD in relevance is going to go down compared to the US dollar, right? So the US dollar goes up, Euro goes down. So Euro USD, if you were to sell it, you'd make money selling Euro USD. Now, if Euro went up and US dollar went down, and you bought Euro USD, and Euro goes up and US dollar goes down, Euro USD is going to go up, you're going to make money. So if you enter the market on a buy trade for a Euro USD, and let's say something happens in the States, or there's an announcement, like Biden, the president makes an announcement in the States, and it affects the US dollar temporarily. Let's say it goes down by a point because what he's talking about is something to do with the economy, inflation, banking, whatever it is. Announcements and politics can actually affect the markets because everybody's paying attention and listening, right? So that can cause a change, and it's usually just temporary. Sometimes it can last a short period of time. Sometimes it can last extended lengths of time before the market corrects itself. So when you're doing a swing trade, that's just one of the few things that can affect the market. So it's pretty common sense to think that the longer you're in the trade, especially with Forex, right? The longer you're in the trade, but including with stocks and cryptocurrencies, the longer you're in the trade, if you're doing a day trade, the more risk you're taking, essentially, because anything can happen at any point that can affect the market, and it could affect your trade negatively. On the flip side, you could do a Euro USD or a Canadian dollar, US dollar versus Canadian dollar, and you're buying Canadian versus US dollar, right? So you're betting that it's going to go down. So US dollar goes down in relevance to Canadian dollar. So USD CAD goes down. So you sell it, and then something really good happens in the Canadian economy. Maybe inflation rates go down, or some sort of economic event that helps the Canadian dollar have a little bump, and you sold USD CAD. So USD is going to go down, CAD's going to go up, and you sold USD CAD. CAD stays here, or CAD goes up. US dollar goes down. So what happens? You're most likely going to win your trade if you sold it, because the US dollar is going down. So it can also work in reverse. It can benefit you, but it cannot. But that's the risk you take the longer you hold your trade open. And this is something that, I mean, to me, it should be day trading basics fucking 101. Basics 101 is swing trade versus scalp trade, and this is what can happen with swing trades. This is why swing trading, a really, really good swing trade rate, be 50, 55, or 60% or more, right, is a really, really good swing trade rate because of the volatility of the markets and the movement in the markets. Now, when you're doing stocks, to me, I think swing trades are a little bit more tailored to stocks, because stocks are, to me, I wouldn't say less volatile than the foreign currency exchange market. They can be just as volatile, if not more, sometimes less. It all really depends on the day and the market conditions and the stock you're trading versus, let's say, the Forex currency pair you're looking at, right? And holding stock investments for long term, a lot of people are just long-term investors. You're not day trading. Obviously, you're going to be holding that for the long run. You're not worried about what's happening tomorrow or next week because you're trying to make your money 6, 12, 18, 24 months from now. Right, so you're not worried what's going to happen in a week or a couple weeks. But when you're day trading and you're doing, you're holding a trade open for a week, the markets can be affected within a few days. And yeah, billionaires and hedge funds and people that literally own the markets, market makers, they can move the market. Do they do it intentionally to screw retail traders over? I don't know. It's possible. I mean, it's very possible. A lot of people like to blame on when they lose a trade they were super confident in, they say, oh, that was market manipulation. I think that's just their rationalization of why they didn't win their trade because they were so confident, right? They don't want to, it's kind of like an ego thing. Oh, I was going to win that trade, but someone screwed me over intentionally. No, most likely they did not. But I would say, yes, the market makers can move the market and it can go against you. Are they targeting you specifically? No, right? No one cares about your $5,000 or $50,000 or $500,000 or even your $5 million trade account. These guys are working with billions and billions and billions and trillions of dollars. Why do they care about people with a couple $1,000,000 or a few $100,000 or 10,000? They're not trying to target you directly. But yeah, can the market being moved by the market makers affect you negatively? It can. It can also affect you positively. So you don't really have anyone to blame but yourself. And the longer you hold the trade open and it's not going towards your take profit, there's a few factors you need to be looking at to see, is the trend going to reverse? Is it what's going on? Is it moving into a consolidation? When a market moves into a consolidation period, even though it's been trending in one direction, so you did a buy and you're hoping that trend continues upwards and it just consolidates for like a day, 2 days straight, sometimes you can get out. And getting out is sometimes the right move because it could end up reversing. You don't know what's going to happen when it comes out of that other end of the consolidation, no matter how good of a trader you are. But with scalp trading and the absolute beauty that is scalp trading, and why, so for me, on my swing trades, I win like high 50s to low 60% of my swing trades. So I'm a pretty good swing trader. Technically, that's actually a really good swing trader, but I only take a couple a week max because I wait for the absolute perfect opportunity. Right? I don't chase opportunities, I let them come to me. Another thing you need to know is don't ever FOMO and fear of missing out. I need to enter a trade, I need to make money today trading. No, if you can't find the right opportunity, wait till later that night, wait for another trade time period, or wait for the next day. And why with my scalp trades, why I win more than 80% of my scalp trades is, one, I've developed a really, really awesome strategy that I do teach in the SupremeCommerce FX Mastery training, the flawless entry strategy. This thing's insanely powerful. Anybody can take it, duplicate it, and become good at it. You just have to be focused and dedicated, right? So, but the reason I win more than 80% of my scalp trades, not just because of my strategy only, it's also because scalp trading has a higher win rate statistically. When you're a good scalper versus a good swing trader, you can win more of your trades as a scalper, because the number one reason, in my opinion, is because you're not susceptible to changes in the market. Like massive changes and shifts in the market aren't happening every 5 or 10 minutes. Right? Like, let's say market makers and billionaires, they're doing something and they're injecting $50 billion into something. Let's say it's a stock and you did a sell option. So, or you're on MetaTrader 4 using a broker that allows you to trade stocks, and you do a sell because you think it's going down and maybe it's even trending downwards. And then all of a sudden someone decides, some billionaire decides, hey, you know what? I really like the price on this. I'm going to buy $30 billion worth or $500 million worth. That goes to openinsider.com. All these other traders decide, hey, this person just spent 500 million or 500,000 on this company. I'm going to do the same. And the market starts to go the opposite direction of your trade. The longer you hold it open, the more susceptible you are to those changes, right? But with scalp trading, 3 minutes, 2 minutes, 1 minute, 5 minutes, 10 minutes, you're way less susceptible to those changes because you're getting in and getting out, getting in and getting out. Get in, get your money, get out. Get in, get your money, get out. And this is why scalping is so powerful. And I think as a brand new trader, your focus should actually be on scalp trading, on the 1 minute, 5 minute, and 15 minute time frames. 15 I actually don't ever do scalp trades on, but I always look at multiple time frames. I'll look at the daily, I'll look at the 4-hour time frame, 1 hour time frame, 30 minute, 15 minute, 5 minute one. Then I'll go between the 1, 5, and 15 minutes, and then I'll go back down to the 1 minute and 5 minute to make absolute sure I am extremely confident in my entry before I enter. I also use my flawless entry strategy and my system of indicators that actually tells me where the market's going before I do it. But the number one thing the video got cut off there for a sec, but the number one takeaways from this video that I want to give to you guys is, one, is the longer you hold the trade open, the more susceptible you are to changes in the market. So that is why I would recommend starting with scalp trading. It's going to be a quicker path for you to become a better trader sooner, so you can start making money faster and become a good trader even sooner, right? It's like the perfect recipe. Be able to get the best results in a shorter period of time. The other thing is going to be understanding the 3 market phases. So I actually have a video on this on my YouTube channel. So if you did find value in this video, please make sure to subscribe. It does help me with my channel. I know the channel's not massive, even though all my videos, all I do is give pure value. I don't really talk about much fluff, a lot of bullshit. I really just get right to the point for you guys. But I do have a video on the 3 market phases, but the 3 market phases are going to help you because just understanding those 3 market phases and then starting to get good at scalp trading or swing trading, rather you get taught by me or not, it's going to help you become an extremely good trader. That's it for this video, guys, and I'll see you next time.